There's a checklist that separates profitable traders from everyone else in 2020-26, and almost nobody uses it because it forces you to say no to trades you desperately want to take. I'm not talking about some basic checklist like, is there a trend? Is there support nearby? Does it look good on the chart? I'm talking about a psychological filter that catches the trades your brain tricks you into taking when you shouldn't, the trades that look perfect in the moment, but you know deep down aren't quite right. The ones you take anyway and regret 20 minutes later when you're stopped out or watching it chop around going nowhere. Here's what's happening in 2026 that makes this checklist mandatory. The market moves so fast now that bad trades punish you harder than ever. You can't afford to take mediocre setups and hope they work out. You can't afford to enter based on emotion disguised as analysis. Every trade you take needs to pass a specific filter, and if it doesn't pass, you don't take it. Period. No exceptions. No convincing yourself it's close enough. I've been using a 5-question checklist before every single trade for the last 4 months. If any question gets a no, I don't take the trade. Doesn't matter how good it looks. Doesn't matter how much I want to be in it. One no means the trade doesn't happen. Since I started doing this, my win rate went from 48 to 67%, not because I got better at reading charts. Because I stopped taking trades that were never going to work, even though they looked like they might. Let me show you the exact checklist and why each question matters. 2 traders looking at the same setup. One uses this filter. One doesn't. After 3 months, one is up 34%. The other is break-even and burning out. Same strategy, same market. The only difference is 5 questions asked before clicking the button. Question 1. Can I define exactly why this trade will work in 1 sentence? Not 2 sentences, not a paragraph. 1 clear sentence. If you can't do this, you don't actually have a thesis. You have a feeling. And feelings don't make money in 2026. This question kills more bad trades than anything else because it forces clarity. Here's what this looks like in practice. You're watching a chart. Price is near support. It's bouncing. It looks bullish. You want to go long. Old you would just take it because it feels right. New you asks, why will this work? If your answer is, well, it's at support and it's bouncing, so it should go up, that's not a thesis. That's hope. A real thesis sounds like, price tested this support level 3 times without breaking, volume is increasing on the bounce, and the higher time frame trend is still bullish, so buyers are likely to step in here. That's specific. That's tradable. That passes the test. The trader using this checklist, let's call him Derek, sees a breakout setup. Before he enters, he asks himself, why will this work? His answer, price consolidated for 40 minutes, broke above the range with a strong candle, and the broader trend supports continuation. Clean. Specific. 1 sentence. He takes the trade. It works. He makes money. The trader not using the checklist, let's call him Kyle, sees the same breakout. He doesn't ask why. He just sees the candle breaking out and thinks, breakouts usually work. I should take this. He enters. The breakout fails. Price reverses back into the range. He loses. He's confused because it looked exactly like the YouTube examples. But he never had a real reason. He had a pattern that looked familiar. Here's the brutal part. Kyle takes about 15 trades per week. Derek takes about 15 trades per week. Derek takes about 6. But Derek's 6 trades all have clear, specific reasons. Kyle's 15 trades are a mix of real setups and things that just look like setups. Over a month, Kyle takes 60 trades, wins 27, loses 33. Derek takes 24 trades, wins 17, loses 730. Zeem knowledge. Different filter. Completely different results. Question 2. Am I taking this trade because my setup appeared or because I feel like I should be trading? This is the question that destroys overtraders. Most traders can't handle sitting still. They feel like if they're not in a trade, they're wasting time. So they find reasons to trade even when their actual setup isn't there. They see something that's kind of close and convince themselves it counts. This question forces you to be honest about your motivation. Here's how you know if you're taking a trade for the wrong reason. If you have to convince yourself it's your setup, it's not your setup. Real setups don't require convincing. They're obvious. You see them and you know immediately. That's it. That's the one. If you're looking at a chart thinking, well, it's not exactly my setup, but it's close enough, that's your brain trying to justify action when action isn't warranted. This question catches that. Derek sees a chart that's been chopping sideways for 2 hours. Nothing's happening. His setup hasn't appeared. He's bored. His brain starts whispering, maybe you could take this small breakout. It's not your main setup, but it could work. He asks himself, am I taking this because my setup appeared or because I'm bored? Answer is honest. He's bored. He doesn't take it. 10 minutes later, the breakout fails. He saved himself a loss by being honest about his motivation. Kyle sees the same thing. He's also bored, but he doesn't have the filter. So he takes a trade, tells himself it's fine, it's close enough to his setup. It's not. It fails. He loses money, not because he can't read charts, because he couldn't sit still. This happens to Kyle 3 or 4 times per week. Small losses that add up. Death by 1,000 boredom trades. Question 3. If I take this trade and it stops me out, will I be okay with the loss because I followed my rules? This question separates disciplined traders from gamblers. If you're taking a trade and you already know that getting stopped out will make you angry or desperate, you're taking it for the wrong reasons. You're taking it with attachment. You need it to work. And need is poison in trading. A trade should be emotionless going in. You see your setup, you execute, you manage it, you exit. If it wins, great. If it loses, fine. The setup didn't work this time. But if you're entering a trade already knowing that a loss will hurt emotionally, will make you want to revenge trade, will make you question your system, you shouldn't take it, because your psychology is already compromised before the trade even starts. Derek sees his setup. Before entering, he runs this question. If this stops me out, will I be fine? He checks his mental state. He's calm. He's not desperate for a win. He hasn't lost 3 times already today. He's not trying to make back money from yesterday. He's not trying to make back money from yesterday. He's clean. He takes the trade. It stops out. You feel the tiny sting of disappointment, then moves on. No emotional damage. No revenge trading. Just, okay, that one didn't work. Next. Kyle sees a setup after losing 2 trades earlier in the day. He wants this one to work. He needs it to work to get back to even. He doesn't ask the question. He just takes it. It stops out. Now he's down on pre-trades. He's furious. He immediately starts scanning for another trade to make it back. Takes a trash setup, born from emotion. Loses again. Spiral complete. If he'd asked the question before trade number 3, the honest answer would have been, no, I'm not okay losing this one. I need it to win. That would have told him to stop trading for the day. But he didn't ask. Question 4. Does this trade fit my risk parameters without compromise? This is the question that keeps you out of trades where you're already setting yourself up to fail. If the proper stop for a trade doesn't fit within your risk limits, the trade doesn't fit. Period. But most traders compromise. They see a trade they like, realize the stop is too wide, and they just move the stop closer to make it fit. Then they get stopped out and wonder why. This question forces you to be honest. Does the structural stop fit my risk? Yes or no? If yes, take the trade. If no, don't take it. Don't modify the stop. Don't increase your risk for this one trade. Just walk away. The market will give you another setup that fits. But if you force this one, you're probably going to lose. Derek sees a breakout. The structural stop is 30 pips. His risk limit allows 25 pips max. Doesn't fit. He asks the question, does this fit my risk without compromise? No. He doesn't take it. Watches it work without him. He's fine with that because he protected his framework. 3 hours later, another setup appears. Structural stop is 18 pips. Fits easily. He takes it. It works. Clean execution. Kyle sees the same breakout, 30 pip stop. His limit is 25. He wants to take it. So he moves his stop to 25 pips, tells himself it's close enough. It's not. Price pulls back, hits his 25 pip stop, then rallies. He got stopped out on a winning trade because he compromised structure to fit his desire to be in the trade. He didn't ask the question. If he had, the honest answer would have been, no, this doesn't fit without compromise. That would have saved him. Question 5. Can I manage this trade without staring at it? This is the psychological test. If you take a trade and you know you're going to be glued to the chart, watching every tick, heart racing every time it moves against you, you're already over-leveraged emotionally. You're too attached. Either your position size is too big, or you don't actually trust the setup. A good trade is one you can take, set your stop and target, then walk away from. You should be able to go get coffee, take a walk, do something else, and come back to either a winner or a loser without having watched every second. If you can't do that, something's wrong. Either your stop isn't where it should be structurally, so you're nervous it'll get hit, or your position size is too large, so every pip swing feels significant, or you don't actually believe in the trade, so you're monitoring it, waiting to bail out early. Derek takes a trade, sets his stop at the structural level, sets his target based on his system, walks away. Literally closes the chart and does other work. Comes back an hour later. Trade either hit target or hit stop. He doesn't care which while it's running because he knows the setup was solid and the risk was appropriate. No stress, no anxiety, just execution. Kyle takes a trade. Immediately starts watching. Every 5-pipe move against him makes his heart rate spike. He's thinking about moving his stop rate spike. He's thinking about moving his stop. He's thinking about closing early if it goes a bit more in profit. He's attached. He can't walk away. This means something is wrong with his execution even if the trade eventually wins. He's trading with fear, not confidence. And fear-based trading doesn't scale. Here's what happens when you use all 5 questions together as a mandatory checklist. You take way fewer trades. If you're currently taking 12 trades per week, this checklist might drop you to 4. And that's exactly the point. Those 8 trades, you're not taking anymore. Those were the problem. Those were the boredom trades, the revenge trades, the forced trades, the compromise trades. They were bleeding your account, and you didn't even realize it, because they were mixed in with the good ones. Derek started using this checklist 12 weeks ago. Week 1, he took 3 trades instead of his usual 14. It felt wrong. It felt like he wasn't working. But all 3 trades passed every question. All 3 were clean executions. 2 won, 1 lost. Net positive week. Week 2, he took 5 trades. 4 passed the checklist cleanly, 1 he tried to talk himself into taking. But when he asked question 2, am I taking this because my setup appeared or because I feel like I should be trading, he had to admit it was the latter. He didn't take it. It failed. Saved himself a loss. By week 4, the checklist became automatic. He didn't even have to consciously run through it anymore. His brain just filtered trades naturally. Bad setups got rejected instantly. Only the clean ones made it to execution. His win rate climbed from 48% to 61%. His average winner got bigger because he wasn't exiting early out of fear, since he was only taking trades he truly believed in. His average loser stayed controlled because he wasn't compromising on stops. Kyle never implemented a checklist. He's still taking every trade that looks decent. Still convincing himself marginal setups are good enough. Still taking trades when he's bored. Still forcing trades that don't fit his risk. Still watching charts obsessively because he's not confident in his executions. After 12 weeks, he's barely break even. He's exhausted. He's thinking about switching strategies because nothing seems to work consistently. But his strategy isn't the problem. His lack of a filter is the problem. Here's the framework. Print out these 5 questions. Put them next to your monitor. Before you click buy or sell, run through them. Every single trade. No exceptions. Question 1. Can I define why this will work in 1 sentence? Question 2. Am I taking this because my setup appeared or because I feel like I should be trading? Question 3. If this stops me out, will I be okay with the loss because I followed my rules? Question 4. Does this fit my risk parameters without compromise? Question 5. Can I manage this trade without staring at it? If you get 5 yes answers, take the trade. If you get even 1 no, walk away. Don't negotiate with yourself. Don't convince yourself it's fine. 1 no means no trade. This is hard at first because your brain will fight you. It'll say, but this trade looks really good. You're being too strict. You're going to miss out. Ignore that voice. That voice is why you're stuck. That voice is why your results are inconsistent. That voice is the enemy. After 30 days of strict adherence to this checklist, you'll notice something. You're not fighting yourself anymore. Bad trades get filtered out automatically. You're only taking setups that pass all 5 tests, which means you're only taking high probability trades with proper structure and clean psychology. Your win rate improves because you stop taking mediocre setups. Your stress drops because you're not in trades you're not sure about. Your confidence builds because you're proving to yourself that you can execute with discipline. Kyle will still be grinding. Still taking 15 trades per week with no filter. Still wondering why some work and some don't. Still blaming the market when really it's his lack of selectivity. Still exhausted from the emotional roller coaster of taking every trade that sort of looks okay. Derek will be compounding steadily, not because he found a better strategy, because he built a filter that keeps him out of bad trades. Make the decision. Implement this checklist. Use it for every trade. No exceptions. Watch your trading transform not because you're learning new setups, but because you're finally only taking the ones that actually qualify. That's the edge in 2020-26. Not better analysis. Better filtering.